is booming. So a lot of people are paying a lot to try and figure out the risks associated, but the opportunities associated with AI are transformational. This is going to be the biggest catalyst behind wealth generation during the next 5 to 10 years, and the super exponential growth opportunities that it will enable. Most people who waited until the S&P gave them permission to move into Tesla are underwater right now, because there, as is always the case with disruptive innovation, there's controversy. Impact of technology on real GDP growth when there are big breakthroughs. And so, as Brett mentioned, the breakthroughs in the early 1900s, telephone, electricity, internal combustion engine, created a step function increase in growth. And you can see it here.
There's a lot of compelling evidence that this decade is going to be remarkable from a macroeconomic perspective.
Right, and it should translate into very nice returns for these technologies. As you can see, if you look at the market today, roughly 19 trillion of the 117 trillion in global equity market cap is associated with disruptive innovation. So let's say a little more than 15%. If we're right, and with Brett's guidance, our analysts have, built the building blocks for us to be able to say this. If we're right, that 19 trillion is going to scale to 220 trillion during the next really 7 years. So that's a 42% compound annual rate of return. And whereas the rest of the world, we see appreciating little or nothing at all. Why would that be? It's back to that creative destruction. The traditional world order is going to change radically. Whereas AI, 37%, that is off of a substantially larger base. And just to give you a sense of the drama here, even for us, and all we do is focus on disruptive innovation. I believe this was 2020, our expectation for the market cap of artificial intelligence out there in 5 years from now was, I think, $40 billion. Now it's up to $400 billion.
Perhaps. And part of that is like, we opened up the model by saying, well, how much value is going to be delivered with AI software? And, if I can, just like if I can deliver a robot to an Amazon or to a Tesla, and that can increase the productivity of their manufacturing base by X, they'll spend some fraction of X to install that robot, and then they'll get great ROI. It's the same with software and how it improves me and all of our analysts as knowledge workers. People pay for software that improves worker productivity. And if you look across all knowledge workers, there's almost $30 trillion in knowledge work wages that is going to be paid in 2030. So if you can improve their productivity by multiples and just pay a fraction of that, you still end up with trillions of dollars, and in fact, more than $10 trillion in our estimation, of AI software spend to help knowledge workers. And therefore, you need $1 trillion plus of AI chips to create that AI software. So kind of rather than approaching it from like, hey, this is IT spend and what people are going to do, we approach it from, this is the output of the technology that's going to be installed. And therefore, the amount of kind of justifiable, really ROI positive hardware we need to support that. And you end up with a much larger market.
Begs a question. We have been shifting our emphasis from, in our various strategies, from hardware centric, that would be NVDA, AMD, depending on the portfolio, towards software and towards companies that are going to capitalize on the productivity gains that AI is going to deliver. Why would we be pulling away? Well, it's a little bit back to the question we're talking about and the confusion that we expect to see in the next year around the cycle. Because believe it or not, even though AI is a force, it really is, we are seeing what we saw during COVID. There's double and triple ordering in a shortage situation or perceived shortage situation in COVID. We're still suffering from the aftermath of that. And, you know, even though this is a huge secular growth story, there's so much in the way of expectations now being built into the check the box AI. And believe me, it's an important box. NVDA has done a magnificent job. We bought it from the time we started the company. We're involved with it when it was $5, and just when we understood, we built it enormously. But it is subject to cycles, and the last one was the crypto cycle. 2017 couldn't get enough GPUs, and there was double and triple ordering, and the stock in the fourth quarter of 2018 was cut by 2/3. Now, that's not going to happen this time because this AI wave is just so powerful. But the expectations do get ahead of themselves. We saw that with, Alphabet, I guess, earlier this week, and AMD. Just the expectations had gotten ahead, and you're going to have the to and fro.
We talk about cost declines a lot at ARC, and on AI in particular, it's the cost decline is happening more quickly than anything we've ever studied. So Kathy alluded to it, but cost to train a model we think is going to fall by 4 times now. Last year we thought by 3 times per year, prospectively going forward through 2030. And on a real-time basis, costs are falling even faster than that for AI training, which is separate from the cost to actually deliver an AI model, which is called inference, and that's following at 85+% per year. But then that's also separate from what it means for the cost to do something within the business or human context at an in-application basis. I can't remember what's on the chart, 12 cents? 16 cents, 16 cents per 1,000 words. So you've gone from $400, $500 to 16 cents. Well, then Anthropic's Claude 2 model scored 90th percentile on the GREs, and it cost 4 cents. So we went from something, it was the same amount to produce written content for more than a century. Suddenly it falls 10,000-fold, and it is now going to be on a cost decline trajectory. It's not like it's just going to plane off. Essentially, written, authored material is going to both be ubiquitous and abundant with all that is good and bad about that. As in, you will have your own personal chatbot that you can chat to that will be, really compelling and interesting and have all kinds of information to share with you. And you will be at risk of somebody, kind of like infiltrating you, pretending to be human when they're really not. And so I think that the implications for like businesses, humans, like all of these systems that we use where like kind of written and oral speaking ability is a mechanism by which we verify that this person is a person that I should pay attention to, is just going to get totally turned upside down by this. And it's not just going to happen in the written word context. It's going to be image generation. It's going to be kind of ability to look at data sets and forecast the direction that they're going. So kind of like the ability to take like an idea and convert it into something that amplifies and spreads is going to be massively magnified here with all kinds of interesting implications by AI. And so like one of the promises of technology is to reduce the friction between interacting between agents, corporations, everything. Like you can imagine there's like the transaction friction is going to collapse in all kinds of different ways, both with AI and blockchain. I think that should like have a profound macroeconomic effect.